Hello, everyone, and welcome back to another exciting episode of Market on Mic. And to all our new listeners, thank you for joining the family. And to our loyal audience, we appreciate you sticking with us week after week. I'm Natasha, your host for today's episode. And of course, I have here with me.
All right, guys, and I'm Daniel. It's your co-host for today, actually, and it's always, like I always say, it's always exciting to come back for another episode of Market on Mic. And to our new listeners out there, actually, it's good to have you join the show. Welcome to the family. And to our loyal customers, it's good to have you back. You've been sticking with us from day one, Natasha, right?
Loyal customers.
Yes, now I don't know your customers. All right,
Oh
our
my
loyal
God.
audience, our loyal listeners, before Natasha enters me again. So, yes, it's always good. Thank you for sticking with us. You are the bond of this family.
Of course, guys.
Yeah,
We
yeah,
do this if we trust you guys.
exactly.
Right. So basically,
All right, so Natasha, before you take my show from me, let me enjoy this moment. All right, so for our new listeners, if you are new to Market on Mic is actually a podcast that brings everything that has to do with trading directly to your ears, right? So if you're excited about that, I want you to hold up a cup of coffee, just relax and enjoy this episode. So today we'll be diving into something very, very interesting, and that is actually interest rates. Yeah. So the thing everyone hears on the news but pretends to understand. Don't worry, we'll be breaking it down in plain, simple English because, as I said, interest rate now. Maybe someone is thinking, okay, I went to borrow money and my interest is just increasing or something. So we're actually going to do a lot of breakdown today.
all right. So basically, Daniel is saying that if you've ever nodded along in a conversation about interest rates without actually knowing what was going on, this episode is basically for you.
Exactly.
So sit back, get your journals out, and get to learn something.
And yeah, just so you know, no judgment, no judgment, right? So if you've nodded before without having any single idea what interest rate was about, no judgment. We've all been there. And like Natasha said, this episode is actually.
All right, so let's actually start very easy. What are interest rates? When we hear about interest rates, what comes to our mind at first? Right, so interest rates are basically the price of money.
Yeah.
So let's say you borrow 100 naira
Or
and
$100.
return about 110 naira. That extra 10 naira is the interest. I'm sure we've done this once or twice somewhere in our lives.
Yeah, that's very, very correct. And if you've ever borrowed money from a Nigerian friend or from any friend, the interest is more than
Of course,
more
I
than
mean,
10.
fact. And sometimes they add late fees
Have
too.
you ever borrowed maybe you borrow money, right, and you don't pay on time? It keeps adding.
It keeps increasing. Okay, so first of all, guys, borrowing money is not a bad thing. A lot of people,
Yes.
in fact, a lot of businessmen, but business women do businesses with loans.
Yes.
So it is not new to the
Correct.
system, and that I think that is why it affects the economy so much. Because if people don't really use loans, then trust me, it should not have any particular effect when it comes to probably the market or something. But you can see that when it comes to the market, interest rates, which is actually loans per se, is definitely very important. That tells you that even the country does business with loans.
Yeah, so there are
So-
good debts and bad debts.
Exactly. So don't feel like, okay, loans are things that, okay, for people who are a certain way. No, it's not a bad thing as long as you know what you're doing and you understand your interest rate. So this particular episode is going to help you make more wiser decisions when it comes to loans and interest rates.
Yeah, that's
So
very,
now,
very correct.
In most countries, central banks set interest rates, like the Fed in the US or the central bank here in Nigeria.
And yeah, that's very correct. And trust me, when CBN makes a move, everyone from central banks to market women, they literally feel it.
Everybody feels it. The economy feels it.
Exactly.
And then suddenly your loan feels heavier.
Because, have you seen Nigerians' interest rate? Have you seen CBN's interest
I mean,
rates?
we are
Oh
on
my
a
God.
double number at this
Like,
point.
24
20
point. Like, I'm
something.
like, oh my God, to borrow money now is war. you know?
Yes, and then your savings account still looks very light.
Yeah. Let's move on, guys. The goal is to actually help you understand what interest rate is.
Yes. So
we've
first of
come
all,
we've actually
Okay.
come from the aspects of borrowing costs, right? So in terms of borrowing, if you borrow money, the interest rates or the borrowing cost, or which you have to pay back, and the interest you earn on your savings account,
Yeah.
if you ever do.
So simply, when you talk about interest rates is the rate, or let's just say that when you talk about interest rate, is that amount of money that is being added to what you're borrowing. Whether you're borrowing from the bank or you're borrowing from a money lender, that extra money you have to pay. That, okay, fine, I'm taking this money from you, I want to use this for business, and by this time of the year or by this time somewhere, I'll be giving you the amount of money. So that extra one that you're paying added to what you borrow is basically just the interest
Yeah,
rate.
thank you, Natasha, for that. So now you must be thinking, okay, interest rate, borrowing cost, how does it affect the market?
Yeah.
Right? If you're having a question in your head, you want to sit back and enjoy this part of the episode. So now here's the fun part. When interest rates or when borrowing cost goes up, borrowing becomes more expensive. Because now, if you're borrowing, let's say the interest rate on a normal base is, let's say 5%, you borrow $100, right? Between the particular tenure you borrow that money, you have to pay an extra $5, right? That's 5%. Now, if the interest rate increases to 10%, that means borrowing cost actually increases to 10%.
Yep.
If you're borrowing money, you're not paying $5 back, you're paying what? $10. So if the rates go up, borrowing becomes more expensive.
Sure.
And stocks often cool down. The reason why stocks cool down is because when the interest rate comes down, it is way easier for businesses, companies to go out, loan money from the bank
and
with expectations of little
interest rate
cost to it. So they're able to run their businesses, make good profit with more money, and are having to return a lesser interest rate. And you see stocks really very active.
Yes.
Right? And currencies like the dollar also get stronger because it becomes more expensive, because if you're investing into the dollar, it becomes more expensive actually.
Exactly.
That's when rate goes up actually.
Yes. But when the rate comes down, that is when it goes down. Now businesses borrow more, just like what Daniel said.
Yeah, businesses borrow more.
Once businesses are borrowing more, you see stocks in the market usually rally, because
That's true.
once interest rate is going up, borrowing becomes more expensive. Businesses are not able to take out so much loan because, of course, you don't want to have a bad debt, right? So they try to manage their borrowing at that particular point in time. So you're going to see the stocks often cool down when the rates are up. But once it is down now, businesses can take as much as they can, because they know that, okay, what I'm going to be returning back to the bank or back to wherever I'm borrowing from is not so much compared to when the stocks and when the rates are up. And then currencies can get weaker because investors look for better returns everywhere. Just like I was saying, that one thing with investors, we're not friends to each other. We just want our money to stay where it's going to make us money, right? So if currencies are not doing so well when rates go down, of course, they are shifting focus to the stocks, because now stocks are able to move, they're able to borrow, they're able to do more businesses, they're able to expand. And you'd also see that with like instruments like gold as well. Yeah,
they keep rising, because now when you see that the dollar or maybe interest rates are low, it means that there's a possibility of probably recession coming in, or possibility of fear. So, and investors are not able to get proper interest on investment, so they try to go to safe haven assets like gold. Right. So, and in that way, they begin to they get more returns. There, like gold and stock. Right. So, on the bottom line, if interest rate is up, what happens to the currency market is that the currency market goes up, is strong. Then the stock market also comes down. Then which other one?
Then when the rates goes down.
Yeah, and when the rate goes down, you see the dollar.
The currencies market.
They go up. So the dollar goes up. When the rate goes down, the currency market goes down. Rather. Yes, then the stock market goes up because businesses can lend more money and run their businesses. I hope you guys understand. All right. And also, gold goes up when the rate is down. And gold goes down when the rates are up. So basically, if you ever see the Naira acting funny, the Naira maybe one interesting spike happening, and you see the dollar just
like
jump.
For instance, now we've been seeing the Naira act funny for a couple of years, right?
Yes, actually, you see jumping from 300 Naira to $1 to 700 Naira to $1 to $1.5. I mean, just it's not stable. So if you ever see the Naira acting funny, don't just blame the politicians. Sometimes it's interest rates doing the mischief. So
Yes,
blame
guys.
central banks.
All right, so let me give you guys some real life examples. So if you're probably new to the market, you might not pick this up immediately, but you can look out for it because we're also going to be having some interesting news about this interest rate be released very soon. And that is the FOMC, the Federal Open Market Committee. So let's actually look at this in real life examples. Now let's take the US dollar for instance. When the Fed hike rate, investors rush in and boom, the dollar shoots up against other currencies. I mean, we're able to see that at least Biden era.
Yeah.
Ever since
exactly.
the
During time of
Russia-Ukraine, we saw the increase in interest rate and we saw the strength in the dollar. So definitely, it's not just the dollar alone, right? Irrespective of the currencies, once there is a hike in that particular
Region.
interest rate, so
Yeah.
whether it's the Japanese yen, whether it's the naira, whether it's the, I don't know about the naira, but okay, but you know, that's the Japanese yen, the Canadian dollar, the Australian dollar. Once you're looking to hike their interest rate, you will definitely see investors rush into that particular currencies, and you're going to see that particular currency gain some really good strength.
against other major currencies. So now gold, it's like that friend who only shows up when things go wrong.
Gold is always there to pick up whatever slack currencies are doing.
So when your rates are actually low, gold shines brighter than ever. Shine bright like a diamond. So because people are running from cash and bond, because cash is not even looking attractive again. Because
Yeah.
what happens if you're investing or if you're buying into the dollar, the interest are actually way smaller, right? So
Yes.
people are running away from the dollar and going into gold. So gold literally shines.
Yeah, so basically, gold is the reliable bestie. So while your cash is a flaky one, you're going to see gold pick up.
Yeah, pretty much.
All right, guys.
Right. So basically, that is actually how interest rate affects.
Mhm. I hope we've made this very simple for you to understand because that's
Yes.
what Market on Mic is all about. We're bringing information about the markets to you easily, simplified,
Yeah.
right? But you can always ask questions if you do not understand. You can always do some research, but it is pretty easy. Interest rates affect the economy. When it goes up, you see the currency of that particular economy doing so well. When it comes down, you see the opposite of it. And of course, don't forget, you always have your safe havens always ready to pick up when currencies are not doing so
wow.
much, right? So interest rate might sound boring, but they're actually one of the biggest force moving the global market every day.
Yeah, you're very correct. And now, presently, if anyone brings up interest rate at the dinner table or anyway, in fact, interest rate, this period is actually the hot cake. Expecting interest rate from the Federal Reserve, that's the US, expecting interest rate from the Bank of Canada. Last week, the Bank of the European Central Bank released their interest rate. We're expecting, I think I've mentioned, okay, Bank of Japan on Friday as well. So these are period whereby we're seeing the banks, central banks releasing their interest rates going forward. So you want to sit on your hands and you want to actually be on alert. So you can finally join the conversation when people are talking about it without faking and nodding your head.
All right. So unless you're still confused, then just smile and nod like Daniel does.
Huh?
Yeah.
What do you
Daniel is that one person that he might not know what he's talking about, but he looks like he does. So he's always
Wow,
like
I'm
that.
speechless.
Yeah.
Shots fired. Wow. Anyway, thank you for tuning in. I think we should end it here, guys. So if you actually found this helpful, you want to share with a friend, you know that friend that probably you know that, are you sure you know what I'm talking about? You want to share this episode with them so they get to understand how interest rate or central bank interest rate affects different markets so that they can take advantage of opportunities next time. Also, subscribe to the channel, put on the notification bell so anytime we post a new episode like this exciting one, you're notified just the way your message or your WhatsApp message comes on your phone. Also, drop us a comment. Like Natasha said, you can ask questions if you don't understand anything. Also, do researches or maybe put down a suggestion, right? Or you can compliment, right? So,
Or you can also get to probably highlight what you understand by interest rate. Let us know what your idea about interest rate is. But there's one thing you want to have at the back of your mind, whether you're new to the market or you've been an existing trader, you cannot forget about interest rates because
all.
this news is being released every single month. And I'm not sure they're going to be releasing news if it wasn't that important. So you want to keep your hands on this, know what is happening within the economies that you trade, and try to capitalize on them as best as possible.
All right, then.
Until next time, guys.
Keep learning.
Keep growing. And always trade
see
part, street smart.
And
See you in the markets.
Bye.